I know a lot of people who are doctors, and a very common question that I get from all of my doctor friends, especially when they start working, they start making the big bucks is, man, I'm paying a lot of money in taxes. Is there anything that I can do? And one thing that I always recommend is go out and invest in real estate, because now you'll be working to build wealth, you own a hard asset, and you can also benefit from some of the tax breaks as well. So let's assume now that you went out and you bought this property. Let's assume it's $1 million. You could do the same with a $100,000 property. The same concepts apply, but you buy this property for $1 million. And this property, let's assume that it generates $50,000 a year of profit from cash flow. So this is a 5% return, $50,000 worth of profit. Well, now not all the income is going to be your taxable income, because now you also have to take out your other deductions. So we already took out the deductions for the building. That's how you got this $50,000 worth of profit, because maybe you generated $200,000 of revenue, but then you have to pay for your property manager, you have to pay for your water bill, you have to pay for the utilities, you have to pay for the maintenance, which brought you down to $50,000. Rough numbers. Now, out of this $50,000, you have to pay for your other business operating expenses. Maybe you have to have a cell phone to run the business. Maybe you need a laptop to run the business. Maybe you need your truck to run the business. Maybe you have to pay for gas to run the business. Maybe you have some meals for the business. So now you can write down some of these expenses, which let's just assume your business expenses bring you down to $40,000 worth of net income. The next thing that you can do is you get to tell the IRS, hey, this property that I bought is 1 year older, so I deserve a write-off for that. That is called the depreciation deduction, where now you depreciate the value of the building. So now this is where the first thing you have to do is you have to separate the value of the land from the building. So let's assume that when you bought this $1 million property, $200,000 was the value of the land and $800,000 was the value of the building. Well, now you can write off a piece of this $800,000 every year until you write off the entire building from your taxable income. Let me show you. If you invest your money into a single family home, then you will get to write off 1/27.5 of the value of the building each year over 27.5 years. If you now buy a commercial building like this one is, then you get to write off 1/39 of the value of the building. So now we know that the value of this building is $800,000. You take the $800,000, you divide it by 89, which is just over $20,000, which means that now you get to take an additional $20,000 write-off just because now your building is 1 year older. This is what's called a paper deduction. You have $40,000 in your bank account, even though this property made you $50,000, then you had your other operating expenses. So now you made $40,000. You take this $20,000 depreciation deduction, which is only on paper, and then you tell the IRS, hey, I only had $20,000 worth of taxable income. Now you have less taxable income, which means a lower tax bracket, which means lower tax rates, which means less money that you pay in taxes. Now, again, you have $40,000 in your bank after paying for all these expenses, and you're only paying taxes on the $20,000. Again, this is why you want to make sure that you talk to a licensed and professional accountant in your area, because there's a lot of rules and a lot of regulations, especially when it comes to real estate investing, and you want somebody who is a professional to guide you, because you want to stay away from the red flags and make sure you follow what the rules are. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.